All right, good morning, trade pros. Welcome to our morning market update for Thursday, August the 3rd of 2018. It is the second last day of the month, and August is already gone. We're moving into the month of September. Today, we're going to talk about emerging markets and how the overnight weakness could translate to weakness throughout the day session trading futures. And also, we're going to talk about, that's it. That's all we're going to talk about, actually. Just a reminder, on Monday, the equity markets are closed for trading. Futures are open until 12 p.m. Central Time, which is Chicago time, and 1 p.m. Eastern. And that's going to translate to less volatility. I would strongly recommend you not trading on Labor Day Monday. There's not going to be much opportunity. It's going to be a chop fest. It's going to be full of retail traders. They're at home because they're not working, trying to finally give it a go of day trading full time. Strongly recommend you stay out of that market. Monday's closed, and we're open Friday up until the closing bell as regular, so it's regular hours. And this is the last sort of week where vacations are running through. Traders and hedge fund managers and institutional money has taken some of this week off, or the entire week, if possible. They're getting themselves ready to send their kids back to school. They're winding down their holiday season, spending the last weekend at the cottage, whatever the heck they're doing. They're enjoying it. And really, reading a lot of reports over the last couple of days, seems like all traders are waiting for September. Seems like it's becoming this moniker. When September hits, you wait. And this upside is great. Markets have had a nice run. However, I think a lot of volume and real money is waiting for September to start hitting bids and selling this market. So that's the real test on Tuesday morning. And in fact, at 6 p.m. Eastern on the open Monday evening. Just so you know, even though the holiday's on Monday, the futures close at 1 p.m. Eastern and reopen at 6 p.m. So only really closed for a 5-hour period. But it doesn't mean that while they're open, there's going to be any opportunity. It's going to just be dead sideways drift with absolutely no volume. All right, today we're going to talk about a few things. First and foremost, we're seeing a few key earnings here. Dick's Sporting Goods down 2.2% on gun policy and Under Armour weakness. Salesforce down 4.1% after giving a soft outlook. Two companies that haven't really done well on the earnings front yesterday. Today's market, if we take a little tour around the world, in Asia, Japan is up 0.1%, and we should cherish that because it is the only market up any amount of money, and it's only up 0.1%. All right, Hong Kong down 0.9%, China down 1.1%, India down 0.1%. In Europe, London's down 0.6%, Paris is down 0.2%, and Frankfurt's down 0.5 percentage point. S&P futures in the United States, Dow is down 0.4, S&P is down 0.2, Nasdaq's down 0.3%. So down, 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 down. Pretty much everything is getting hit. However, if you look at the chart on a 2-minute or 1-minute time frame, we don't use time frame charts, by the way. It's very hard to make money using a time-based chart. You got to use something rotational. Anyway, point I'm making is if you look at a chart on a smaller basis, and you look at it, you're going to say, wow, the market's down a little bit. But you zoom out a little bit and you find out what the market's been doing. It's been nothing but up, nothing but bullish. A little bit of a sell-off here is normal, right? This doesn't make you bearish. This makes you still bullish, waiting to see what happens around some of these levels. 29.05, key support level in today's session for the S&P 500. Trade pros in the room, we're going to go through and give you some levels and trade ideas in a moment. But I'm going to tell you this. Yes, it's a sell-off. And volume's only 150,000 contracts so far since 6 p.m. Eastern to just about 20 minutes before the open. Very low, very, very low. And we knew that Wednesday, yesterday's day, was big because of the oil inventory trade. And my gosh, did we do well in the room. I think everybody in our trading room made money yesterday. Everyone that was vocal, at least. Very proud of the guys. So, team, I know you're listening right now. Very proud of you. Had one heck of a Wednesday. Now, let me give you the spiel for Thursday. Let's not lose that money today. All right, let's keep that money this week. That's the goal. That's the objective. We said since Monday, Wednesday is going to be the big day of trading. If we get something today, great. If we don't, keep the powder dry. Next week, all traders are back at their desks. You see a lot of volatility. Today's goal is to preserve capital. Trade less frequently, trade less contracts, take profits quicker, and don't subject yourself to big losses. That's all it is. It's 3 goals. You have 3 goals for today. Finish the day and tomorrow, and you're done for the week going into holiday weekend. All right, crude oil is up 0.4%. Gold's down trading around 1208.50. However, let me just check my position. I managed to snipe a nice long on gold once again. 1209.53 was the average price. We're going to see stop below at 1204.80-ish. I just told you YouTube. There you go. Now you know what I'm doing. I think there's a little bit more upside for gold. Have a look at equities. If equities manage to sell off some more today, then you could really expect to see some gold upside pressure as well. All right. That's kind of why I like it. Is it an amazing trade? Nothing's an amazing trade. You don't know. If it's an amazing trade, it's a guaranteed loser. If it looks too good and if it doesn't feel risky, it ain't going to perform well. Gold is down 3 times. Bitcoin's down 1.8% to under 7,000 again, 6,900. 10-year Treasury yield is flat. This morning we had initial jobless claims. I'll go over those numbers with our team. In fact, you know what? I can just go over it with everybody. Let me just turn my head and look over here. I'll do it live. We had a couple of economic numbers hit today. July personal income, 0.3% versus 0.4% expected, so it misses. Spending comes in line with expectations. No back month revisions or current month revisions. Canada had June GDP came out at 0.0% versus 0.1% expected. Year over year, it's a 2.4 versus 2.3%. So it's a 0.1% increase. Justin Trudeau, our prime minister, is meeting with Donald Trump and having until Friday to close the NAFTA deal. So there's some volatility around the dollar there. And last but not least, the weekly jobless claims numbers come in at 213,000 versus 212,000 expected. That's in line with expectations, not really going to cause much market movement. But the 4-week average down to 212.25 thousand versus 213.75. So the 4-week average is taking a little bit of a dip. So that's significant. That's something the market's going to notice. All right. 10:30 natural gas inventory. And what else do we have? 4 p.m. money supply and 4:30 Fed balance sheet. Actually, they're both at 4:30. My apologies. All right. What's causing the markets to get a little bit spooked here today? It's all about emerging markets. Emerging markets are not emerging anymore. They're just now markets. That's what we're going to call them. The peso dropped 7.5% today versus the dollar. Not today, yesterday, on Wednesday. That brings the losses to half. So down 50% year to date for the Argentinian peso. President Macri asked the International Monetary Fund to speed up delivery of a $50 billion bailout package. So if the IMF is saying, hey, we're going to help you out, we got a bailout package going, you guys just hold tight for a couple of days, we'll get it set up for you. And the president's like, give us the money. That smells like trouble to me. I don't know about you guys, but I'd be concerned. It was the largest one-day decline for the Argentinian peso, by the way, since 2015, since it was allowed to float, but because before that it was actually pegged. And it's the third largest Latin American economy. Now, here's another thing. Turkish lira down 2.65%. Central bank deputy governor quits in Turkey. And that's pushing down the currency. South African rand down 1.64%. Indians rupee slumping to a new record low. Emerging markets are getting beat up. And it's not like they weren't getting beat up. They were always getting beat up the last couple of weeks, but the equity market turned a blind eye to it. All right. It's like seeing the corner of your eye, your friend at the bar getting shoved around by some guy. You know it's not time to intervene yet, but you better be putting that drink down and getting ready. That's kind of what's happening here with traders and looking around the world. They're looking at the corner of their eye and they're kind of trying to ignore these emerging markets, but they just can't. And that's the problem. So keep an eye out on EM. Look at the Turkish lira, South African rand, and Argentinian peso. Those are 3 currencies you got to watch. We're going to watch them in the trade room today for correlation. All right. That's all we got for you today. So enjoy the day. Remember, trade carefully, manage your risk, trade like a trade pro, and you guys should be out there with the number one goal today of preserving capital. And when you go with the mindset of preserving capital, you're going to have enough patience to give yourself a chance to make money when the opportunity comes. Because in trading, it is not about taking every trade. It's about taking the right trades. All right. I've never lost money on a trade I haven't taken. I have, however, lost money on trades I have taken. Therefore, not being in a trade does not make you a not trader. Not being in a trade doesn't mean that you are not a trader. How about that? Be calm, be patient, give yourself some time. Trading room guys, let's jump into the charts right here. Pardon the mess in the background. We have kind of a whole bunch of crap back there. Some cables we got to fix. Here's our screens that we're going to jump on. Oh, this one's kind of dusty. Oh, wow. We got to do some dusting here, guys. I got some great news for you tomorrow. Tune in. Be sure to be there. And be sure to click the link below. Join our mailing list as well, because every week we give you guys free analysis. That's kind of been a secret I've never shared with you. I don't know why. We have a mailing list that goes out every Sunday with in-depth analysis levels, what to watch for in the upcoming week. If you click the link in the description, it'll get you there and you get on the email list. I promise you no spammy stuff. We don't do that. All right. See you guys soon. Take care. Goodbye.